I wanted to talk today about what's going on in the crypto industry with a lot of the crypto lending industry facing its biggest crisis with several of the leading firms filing bankruptcy. Now, I know some of you own crypto, and I also know at Wealth Legacy Institute we've been following it for 4 years, but we have not recommended it in our clients' portfolios. And there's several reasons why. The very first is it's huge volatility. And second is it's harder to trade at a very low cost. And three, it's uncertain. So let's talk about what is the impact of cryptocurrency, what's going on today, and what are the things that we need to be concerned about. So it all started with Genesis Global Capital, which distributed $130 billion last year in 2021, filed for bankruptcy last week, and joined BlockFi, Celsius Network, and also Voyager Digital among companies that have collapsed, leaving investors frustrated and, of course, regulators scrambling to figure out what, in fact, is going on. Genesis was the biggest unsecured creditor of failed trading platform FTX, whose former CEO, Sam Bankman Fried, faces fraud charges. And due to FTX's collapse, Genesis went into trouble, forcing crypto exchange Gemini to terminate its lending product, in which Genesis was a lending partner. So this may be the end of this type of lending program. Cryptos promised high returns with relatively low risk, which ultimately, based on these findings, proved unsustainable. And what I mean by high returns is not the return of the value itself of the crypto, but the value that you would see from interest income received on your crypto. So actually lending out your crypto and getting an interest rate paid on that. The SEC has been cracking down on crypto lending products by calling them securities. So the financial watchdog even fined BlockFi to pay $100 million in penalties and forced Coinbase, which is a large platform, to cancel its crypto lending program. So most recently, it fined crypto lender Nexo for launching its product. So let's talk about what's really happening here. Like, what's happened? The crypto lending platforms offered huge attractive returns, and investors poured their capital into them. Not surprising, considering the interest rate that we make on a savings account is maybe, if we're lucky, 23 basis points of APY, excuse me. So that's 0.23 annual percentage rate compared to as high as 20% annual percentage rate that you would get on your crypto lending platforms. Huge reason why a lot of people put their money out there to get interest paid on it. So, what are the pros and cons around that, and how was that able to occur? Well, think about this. The ideal collateral, crypto, is kind of an ideal collateral piece because it can be liquidated at any time, unlike real estate or, I don't know, yachts. However, with their high volatility, the collateral amount must be higher than the amount one borrows. That seems like basic sense. However, crypto lenders didn't follow this rule. Because of the volatility, the loan to value ratio, which is the amount of collateral relative to the amount loaned, can sink below the loan value faster than it can be sold. So when loans are not fully collateralized, meaning less than 100% collateral deposited, the risk obviously is much higher. And that is exactly what has happened in the crypto lending market. The volatility of the cryptos went down. These firms couldn't sell off quick enough to be able to get out of the positions and therefore were under value or below water, so to speak. So what is the bottom line? The crypto lending industry is facing enormous challenges, but it doesn't mean decentralized finance or DeFi will go extinct as developers are working or making crypto lending more risk adverse and efficient. So all of these are in the growing pains of a new technology and what that means in the disruption of finance and other industries. So hang tight. Regulators are swooping in, and they will play a crucial role in determining where checks and balances should be placed. And the growing regulatory scrutiny will actually inspire new market leaders with strong disclosures and strong risk management practices to enter this space. So, as discouraging as the headlines may sound, recognize that anytime you have something new and growing, you're always going to have the ebb and flow of what happens as it struggles to become something. So I hope this is helpful. If you know someone that owns crypto or has an interest in cryptocurrencies, please share this with others and like this video. Thank you for your time.